Hello, and welcome to the podcast here, the Cube Pod, episode 121. I'm John Furrier with Dave Vellante for the weekly pod. Dave's already in salute position. Dave, salute to you. I'm in Palo Alto, the heart of Silicon Valley. You're in freezing Boston, East Coast, and Gemma and the team are in freezing New York City at the NYSE Wired Studio, the CUBE's new brand. Great to see you. How's it going? You look
Good to
like
see you, John.
they shoveled the driveway recently. Looking good.
I've been shoveling for a week. I'm like dying here.
I mean, the
And,
storms, the
but it's good.
bomb cyclone, they're calling it,
Yeah,
freezing
I know.
weather. I stayed in California an extra day with the crew here.
It's kind of awesome though, John. You love a good storm, and it's the snows. There's nowhere to put it.
Yeah.
I was down the Cape the other day, and there was nowhere to go. Two cars couldn't pass. I had to shovel out my driveway down there. It's crazy.
Well, normally the snow, like in the city, it's very fluffy, and then it turned a little bit sleep. But because of the cold weather, the drifts are like ice cubes, and all the bays are frozen in New England. I saw some friends in South Shore. It's really, really bad weather. So
The Hudson River's frozen, I heard.
it's pretty bad. So I'll be back heading out tomorrow. I'll be back in New York for the NYC Media Week, so that's going to be good. And just a lot of action. The schedule's lining up, but
I just got the invite to that, John. I got the invite before. I had it on my calendar for the next week, but I suppose they moved it because of the Super Bowl. Who wants to do anything on Monday after the Super Bowl?
No one.
Should be a national holiday, don't you think?
it should be, yeah, especially if an NFC team wins. That means the stock market will go up. We'll
No, that's old news now. Come on. We've debunked that.
Well, we're going to be presenting the CUBE case study at the event. It's going to be fun. It'll be great to see. We're not sure about the bell ringing. Last year we rang the bell. It was great. But let's get into this week. I mean, we got the IBM earnings I want to get to in a second, but this week has been all about AI money, AI fear, and the market that's kind of blinking. You saw the stocks. Microsoft got hammered, lowest price ever. So you're starting to see a little bit of panic. The deal making went into overdrive. There's no signs of anything slowing down. So the whole kind of bubble thing is still in play. I think it's more hype, but I don't think it's a true bubble. The numbers are getting crazy. The ambitions are even bigger. And the anxiety is finally catching up, and people are really kind of, really looking, is this real? So I think the AI money mania is big. OpenAI and Anthropic are hovering up capital like it's nobody's business, like a vacuum. They're sucking all the oxygen out of the room. OpenAI reported, talks of 60 billion more in capital. Basically, everyone with a balance sheet, Amazon, Microsoft, Nvidia, SoftBank, are coming in, and the discussion of the IPO. Now, remember Netscape, which we always talk about, the browser wars. They came out in 94 and went public in 95, massive numbers. So I think OpenAI is having that Netscape moment, Dave. We always talked about ChatGPT. The numbers are incredible. And Anthropic in the enterprise, OpenAI running the table.
I hope the outcome's better for OpenAI than it was for Netscape. I'm more optimistic.
You saw Starlink merging with XAI, trying to put that together for their IPO. They're going to go public. So, the IPO window is opening, and, there's no signs of stopping. I saw another chip deal funding, startup with like a $200 billion valuation. So definitely the AI infrastructure is continuing to thunder away. OpenAI at the top of the stack at the applications, getting the eyeballs, or adding in advertising, brands. So you're starting to see a lot more activity. And again, they're just raising money like it's nobody's business.
Well, I'm more optimistic on OpenAI than some other folks. One of the analysts on one of our predictions, our Data Gang predictions, called for OpenAI to implode this year. I don't think that's going to happen. I think to your point about, you mentioned the eyeballs, I think that there is strong synergy, believe it or not, between consumer and enterprise, because as you know, innovation starts in the consumer and then it migrates to the enterprise. We've seen that before with Microsoft, certainly with Intel and others. Look at Nvidia, gaming. And so I think it's going to be an advantage for them. I think it will confer advantage in the form of data and volume and knowledge. And I've predicted that OpenAI is going to exit 2026 with more enterprise revenue than Anthropic. And I'm very high on Anthropic, as you know. I've put a little money into Anthropic when it was a $20 billion valuation.
We'll see how that turns out. Make sure you're in the right SPV that actually has shares. Yeah. I got a little money in Polymarket too, a little similar thing. But I want to get your thoughts on these mega rounds that just keep coming on, from AI chip design to agent platforms to enterprise automation. This isn't just an early stage froth anymore. This is industrial scale capital formation, Dave. I mean, I have never seen this in my lifetime at this level of basically seed rounds getting massive numbers. Series A, B, and C on classic venture capital are in the stratosphere. I mean, they're mega rounds. They just keep coming.
Well, and it's like, you remember Larry's rant? Where he's, is it cloud? You know, Microsoft Word, replace all. You know, internet with cloud. Well, that's what's happening now. You're replacing cloud with AI. And if it's not AI, you're not going to get funded. If it is AI, you will get funded. And a lot of it is not going to make it. There's going to be some winners and losers.
Yeah.
And so that's what we're in right now. It's unbelievable, right? I mean, even ourselves, hey, what we used to call cloud infrastructure, our cloud infrastructure business, now it's an AI infrastructure business. Hey, why not? The trend is your friend. Why fight fashion, as Jeremy Burton would say.
Well, we're seeing some crypto action, not as hot as the AI side, but you're starting to see the movement on crypto infrastructure because of digital assets going on chain and the real world kind of physical, digital kind of coming together, similar pattern in AI. But I think what's interesting to me is that the dynamic of market dominance has changed, and we've hinted on this in the pod and talked about it a bunch of times, but it's kind of happening, this idea that there's no fast follower. And I think there's an arms race here, and you see other news that points to this. Apple quietly dropped $2 billion on QAI, its biggest acquisition, AI acquisition ever, signaling that wearables and on-device AI is a serious front. We got MWC coming up. We'll see a lot more edge. So hyperconverged edge, edge factories, central factories for AI. So I think whoever gets there, the market position, and can get that scale, that seems to be the competitive strategy that wasn't really in the playbook in the past waves, because yeah, there'd be fast followers, they come in behind, a little bit slower velocity, so you got more velocity, bigger stakes on the table, and it's almost one of those things where the bet is, where do you sit on the bet? Are you on the right side of history, and can you deliver at the speed and scale? And all the big whales are in there: AWS, Microsoft, Oracle, Nvidia, all leading with their legacy money and buying power and infrastructure power. So yeah, I think cloud infrastructure is a tell sign to how it was done in SaaS to this AI native era. What's your thoughts on this? Because even IBM's up 12%. So like, IBM coming in. So I think the enterprise is kind of boiling up a little bit, but you got the frothy mega rounds and the big positioning on the AI side.
My thought is the dollar is losing value. I mean, it was up today a little bit, but the dollar debasement is a clear trend. That's why, big reason why gold is going through the roof. So if you're sitting with dollars on your balance sheet, you're losing money. So you might as well deploy it, and you might as well invest it. I mean, you're throwing off cash like crazy. If it's just sitting there on the balance sheet, either you should throw it into R&D, or put it into M&A, or invest in companies, or do what Nvidia is doing, all of the above. I mean, don't let it sit on your balance sheet. I mean, Apple has so much money on its balance sheet. It's gonna be interesting to see what Berkshire does, but that's my thought. I mean, people, denigrate this circular reference, but what else are you gonna do with your money? I mean, why not make some bets? And some of them are gonna pay off. Probably most of them are gonna, vaporize, but that's okay. As long as you get 1 or 2 or 3 big winners, you're going to be great. I mean,
You mentioned the circular reference. I saw CNBC anchors yesterday arguing. Jim Cramer took the pro Nvidia position, called it the greatest success story of all time, and do kind of agree with him on that one. And then the other anchor was saying, well, I'm a journalist, I have to ask the question. And so it's kind of like a little tit for tat on the CNBC, but they're getting pounded on this circular reference. And what people don't understand is that Nvidia is essentially an investment partner. So they're backstopping and supporting the growth. Of course, they're a supplier to the supply side as well as the consumption side with the ecosystem. Why wouldn't you invest? Because they're going to end up getting the benefit. So what's the difference in Nvidia being an investor versus, say, JP Morgan Chase or a bank? So if I'm a
Or a
startup,
VC.
or a VC, if you're CoreWeave, they did a $2 billion deal there. They're backstopping other deals. They're engaging the system with their products. So they're making the market. So I don't think this circular thing is as critical as people think. And some people compare it to, the dot-com days with revenue recognition, where people were kind of taking advantage of the wave before the regulatory piece caught up. But I don't think Nvidia's foul of anything. I think it's just smart business on Nvidia's part, because why wouldn't you prime the pump on the market, especially with the AI infrastructure? Once adoption happens, that flywheel kicks in, and that's why I think the OpenAI IPO is going to be pretty significant. And you see even XAI kind of coming in as well. I mean, this is really why I think AI is different, because you have market forces like Nvidia, like the startups that are getting the mega rounds. So it really is a musical chairs, not just from a bubble standpoint, but from a market position. So if the music stops and you're not in a position, it's musical chairs. When you were a kid playing that game, it's like you're running around, music stops, you better grab a chair.
We're probably going to eat our words because we're perpetual optimists in tech, but I think you're right. I think, like I said, what else are you going to do with your cash? But we've seen this before. Microsoft did it with developers. AWS did it with startups. Intel did it with its ecosystem. And so I'm reminded of what Al Shugart said to me one time. It's way worse to be in a booming market and you can't deliver the product. It's like if you miss a cycle, you're an idiot. And so I'd rather invest or have an he's a disk drive guy, right? You'd rather have an overcapacity than not being able to meet demand. And look at, you're seeing that today in the memory market. If you don't have memory, if you're one of these players that missed the cycle, you're in trouble. Look at Intel and semiconductors. I mean, it's missed the biggest cycle in the history of cycles. Now, of course, its stock is doing well, but I mean, that to me, your point is right on. You have to make your bets, and otherwise, what's the point of having the company? I mean, what else are you going to do with your money?
Hey, if you're an arms dealer, you might as well keep more arms being built. You want more,
exactly.
You want more GPUs and systems out there. I love the Nvidia piece of it, because I think that is very relevant. And I get why people look at it with a caution, but I don't think they understand the market dynamics. And I think that what you just pointed out historically has been done before. That's how ecosystems are built, right? That's how markets are made. And again, this AI market is completely different with Nvidia. And I think the AI factory positioning is now taking hold everywhere. And again, you know me, I've been shouting top of my lungs, there will be an AI factory at the edge. We'll see how that plays out at MWC. I don't think it'll be tone deaf when we start amplifying that message, but I think everyone's hungry from an infrastructure wireless standpoint, to carriers, to Nvidia's, to Nokia, and everybody else in that market. If you're in the IoT game, or you're in the physical AI game, or retail, or healthcare, or manufacturing, or oil and gas, you are going to want AI factories everywhere.
Well, and so, look, everybody's worried if that journalist that you were referencing, of course, they're going to say, was it a bubble? Well, yes, of course we're in a bubble. And so when you're in a bubble, you got to ride the wave. You got to pick your spots, whatever bromide you want to choose. And I think the concern is obviously the bubble will burst, which at some point it will, most likely. But that's where you got to pick your winners. And I think Nvidia is a winner. You always see these guys, well, sell this and buy that. Well, okay, maybe they're sharp investors, but sell Nvidia, sell AWS. I don't know about that, especially with regard to Nvidia. Maybe there's other bets out there that you can make, but I think those are going to be durable. I think the mistake people made in the .com is they thought a company with a website had a durable business model. And so, but the fundamentals of Nvidia are very strong, unless AI is BS. I don't think it is. I think you're going to start to see real returns this year in enterprise AI ROI.
So just as a reference, the CNBC was a squawk on the street yesterday. It was Jim Cramer and Dave Faber were the ones having the debate, but it was kind of a collegial, kind of fun, kind of like how you and I banter. But it's funny how to see David calling out Jim, well, are you just taking what they tell you? And I think Jim was really forthright in saying, look, at Nvidia is a greatest success story. So we'll come back to Nvidia I want to get to IBM, but I want to get your
I got
thoughts
it.
on, go ahead.
I just got to make a comment about Kramer. I mean, people crap on Kramer all the time. Oh, the anti-Kramer trade, and they'll take all the Kramer stocks and they'll say, oh, look how they did. Kramer's a legend. He's been on Nvidia way, way, way before the AI trade. He even named his pets after Nvidia. So, I mean, I think I've shared with you, he was one of my first clients at IDC on our Wall Street product, and he was crazy, but the guy works his ass off and he makes some good calls, and he does sometimes, go with the wind, but he'll call it like he sees it. I mean, I really respect him, especially his work ethic is freaking
Oh, he
unbelievable. You
works.
see him
I
down
mean,
there.
he works as hard as I do out there. He and I are
I
one of the
know.
last ones to leave the building. He's taping his show, Mad Money, really literally up till like 5:36 every day. So yeah, he definitely works hard, but he's totally cool. He's a cool dude. He's got his chops there. He knows his business. But he's right on Nvidia on this one, and so is Dan Ives. But it's easy to get behind a bull market when a company's making a run, but they get the product roadmap, like what we're doing in the analysis. They see it. I don't think they see the depth we see because we're a little bit more deeper on Nvidia than those guys are, but they are seeing it and connecting the dots, and I think that's what makes him such a good stock picker. And again, now it's obvious for Nvidia, but if you look at who was talking about Nvidia before they became, the Main Street best investment ever, it was us, Kramer, and a bunch of other ones who saw the fabric of hyperconvergence, distributed computing, the role of compute, the demise of Intel, the rise of Nvidia. Only a few people, including us, were there. He was one of them. I mean, I got to give him massive props for that. And he was being briefed like us, so he saw it. He had the date. I don't think he was, schmoozing and giving a wet kiss to Nvidia. I think it was legit. Same with Dan Ives. He got a lot of criticism for being pro Nvidia, but guess what? He's right. He was right.
I think I look at Nvidia and I'm saying, geez, people are so. I think they look at the valuation and go, "Oh my God, it's trillions. It can't go. It can't keep going up from here." I think it's like sports salaries, pro sports salaries. I think it's going to, all these winners are going to look. If you believe that AI is going to have a massive impact on productivity in the economy, which I do,
Yeah.
and we're already starting to see it in the productivity, but I think we're going to see sustained double-digit productivity growth for some period of time, the better part of a decade, as a result of AI. So if you believe that, that means that the GDP globally is going to increase, and so these valuations are going to increase along with it. Along the way, it could get ugly. I mean,
Yeah.
this is the thing. But to me, that's going to be a buying opportunity for the winners, and I think Nvidia
Well,
is going to be
we're
one
gonna
of
we're gonna do an under the hood series, AI under the hood, about memory. That's a big shortage right now. People are on the right side of that. On the supply side, are going to make a lot of money. But I always get asked, Dave, what's my outlook on Nvidia? And again, don't take this. I'm not an advisory investment advisor, but from the product standpoint, if you look at Nvidia, and I'd love to get your thoughts on this, but I say the following: look at the market. Will AI factories, or the concept of computing power, be an enabler, an accelerated enabler, not a disruptive enabler, a accelerated enabler for everybody, because no one's really disrupted, everyone is enabled and accelerated it in that way. So that's a yes. Two, the networking. If you look at the networking trends, they already got networking inside the system. Now you're starting to see other networks form. That's why I'm focused on the wireless carriers right now and the infrastructure with Ethernet, because the connectivity between these factories, will they enable edge and then pure distributed computing? And third, will AI native applications happen? These are the three major bets in my opinion. And of course, with AI native apps, you got a dependent variable around developers. That's a check. Go to Hugging Face any day of the week and look at GitHub. It's off the charts. Open source is booming. So on all three factors, okay, it's a yes, yes, yes. So to me, Nvidia has massive headroom. Nvidia and its ecosystem, both on the supply side and on the ecosystem side. Plenty of developers, plenty of use cases. Every vertical, every market has AIification. Everything AI will be there. And if you want to even get more aggressive, look at the physical AI side. That's every car, everything that's instrumented. So I think that Nvidia, if they continue on this pace, could literally double their market cap, okay, and with that headroom. So kind of a swag, but that market is massive.
Yeah, I would agree. I think what's hard to sort of grok here, no pun intended, is you have these, really well capitalized companies and you feel like, oh, nobody's going to ever unseat them. But at the same time, you have these startups that nobody's ever heard of. Obviously, OpenAI is an example, Anthropic, Cohere, all these guys. And they come out of the woodworks and all of a sudden they're driving the market. Somebody just sent me, Furrier actually sent me something really interesting I'll share with you. He said, in the world of search, currency is referral traffic. That is which websites or apps are sending people to a particular business. A year ago, 90% of that traffic came from Google, says this guy Balin, who's whatever the source is. Starting last summer, something changed. The chatbot referrals started to rise dramatically. Now he says on average, 44% of his clients' referrals come from AI. So, okay, that's an example of a shift that happens overnight. Now, does it happen in terms of monetization? It's smaller, it doesn't affect it. So it's, the hard part is, okay, not everybody's going to win, but there are going to be some winners. And not everybody who's an incumbent is going to dominate. And there's going to be some shifts. And so you got to do your homework and, try to make your bets. But I would bet, first of all, I think the hyperscalers are all going to, they become the new legacy, but I think they're all going to get their fair share. I just don't see them suddenly, disappearing. I think they'll have challenges. I'm really high on OpenAI and Anthropic. And I think a lot of those sort of surrounding kind of AI companies, the wrapper companies, I think a lot of those are going to dissipate. The big question, John, I'd love to get your take on this, is the SaaS vendors. Mm-hmm. I don't think all of them are going to make it, but I do think some of them are going to make it. I actually think Benioff is a baller and a visionary. We'll see what happens with ServiceNow. There's rumors now that McDermott's leaving. I think he's just negotiating for a better deal. So I think ServiceNow will be there. SAP, why did SAP win way back when? They had the best data model. Yeah. So, they're not, I don't think they're going away. I know it's close to SAP. Oracle, it's going to be interesting. Hopefully AI will make Larry Ellison live forever, but maybe there's some kind of transition plan there. But he has been the heart and soul. Like, what happens to Oracle after Larry's not there?
Amazon Web Services is a good proxy. They had a layoff this week, a big announcement, another 16,000. The bulk of that came from AWS. AWS is the SaaS leader, in my opinion. They're the proxy for SaaS. You mentioned Oracle. Oracle never went away. They had the database. They're now thriving in the cloud. So like Oracle survived cloud, cloud will survive AI, and I think Amazon Web Services will, and Microsoft will get a bunch of share. And I think what SaaS happens with SaaS is there's going to be winners and losers. The ones that move over to the native AI will win. And what that means is they have to be model centric. So I think if you look at AWS, I think they're taking their medicine on the layoffs from the overbuild post-COVID, okay? And also the ecosystem transformation that's happening. If you look at all the activity I've been seeing over the past 60 to 90 days, recently 60 days, is the partnership equation is changed radically for these platforms, the big monster platforms like AWS, even OpenAI and Nvidia are expanding ecosystems. So you're starting to see the ecosystem formula play out because platforms have to have robust ecosystems. In the ecosystem that is modern legacy, as you call it, or you said legacy, today's legacy, I call it modern legacy.
Yeah, modern legacy,
they all have
that term.
Amazon Web Services has a massive ecosystem, as does people like the Dells of the world, and now Nvidia is just booting up one. Ecosystem success will absolutely be the key. So if you squint through the Amazon Web Services transformation, they have to get AI native up and running, and they have nailed the model piece of it. The question is, will that be adopted? That's going to be the question. So for SaaS, how fast can they move to AI native in a pure, high velocity, not vibe coding, but low code. Vibe coding turns into essentially code assistance on steroids. That means tighter integration, agents being turned on that actually have real use, revenue generating capabilities and user experience. So that to me will be the tell sign. So I think the SaaS UX first principle will move quickly into AI native, where if you nail the AI native use case on user experience and combine agentic workflows with data, that's the formula. So that's to me the filter.
Okay, now the flip side of that, so I agree with that. You got to get to AI native. Now the flip side of that, not even the flip side, but the disruption comes from something Paul Nashwati sent me today. Lawyers talking about this all the time. This is some guy, Guillermo Flor. He says he's an angel investor, whatever. He's pitching his newsletter, and he put this out with this picture of a pretty girl and it had nothing to do with it. So he's pimping his
Link bait.
stuff. But yeah, but nonetheless, he said most companies are about to get outcompeted for one reason. They're still paying 2020 prices for 2026 output. What used to cost 100,000 now costs a few $100. Here's the stack shift. I mean, I think AI helped them write that. Design, weeks plus agency now turns to hours with tools. Copywriter plus revisions goes to drafts and minutes. Video, production team goes to AI clips and B-roll, something we know something about. Sales enablement team goes to always on AI coaching. Support goes from headcount to resolution automation. The mode is no longer who can create, it's who can distribute, get my latest playbook, blah, blah, blah. Now, you and I know.
I like that, by the way. Distribution is key.
Yes, I think he's right. You know, it's just his like link bait it kind of turned me off, whatever. But he's directionally, it's correct. And it's something I think about. I told Paul, you know, I love Paul Nishwati. He's always pushing. And I said, John and I think about this in our business every day. Right now, when you use AI, it's like, wow, that was awesome. And then you spend a lot of time fixing the AI and fact checking the AI, et cetera, which is fine. At some point, it's going to get really, really good. And this is where Floyer's saying the frontier model vendors are going to build software layers that make it a lot easier to deploy. But right now, there's people out there with technical chops and who are really driving this business as AI native, and they are going to come out of the woodworks. And they're in plain sight now. It's called OpenAI and Anthropic, and you know,
OpenAI and Anthropic are very good right now. I mean, I would say that they've gotten much better. The only issue is that their hallucinations that people called are kind of going away, but they're still contextually not have good memory. Right. So the threads are different. You can see that, but as a consumer, you just redo the prompt. And I think where Floyer is getting at is right, because what's happening on the enterprise side is the bar for mistakes is very high. So you can't have hallucinations, you can't have inaccuracies and different answers to the same prompt. It's got to be more precise and prescriptive on the answer. So I think what that means is, as OpenAI gets better, you'll see distillation and integration where, this is where I think Amazon got it right with their strategy of having that Nova model, because I think that's the tell sign. OpenAI clearly can walk into the enterprise and provide large frontier as a service models to people bolting on their models for accuracy. I think that when that happens, the enterprise explodes in growth, because that is the only limitation, in my opinion, of why the enterprises aren't blowing it out of the water. That combined with the CapEx requirements, so I think you're going to see more efficiencies around mixing and matching XPUs and GPUs for architectural things on the factory side, AI factory side. But the key will be, can they get their own models to hit that one point, accuracy? And I think as agents come on, that's going to be a big part of this year, because agents can do that end-to-end workload, nail the accuracy of what they want to have accomplished, use proprietary data, and then integrate with the models and take advantage of that. So I think that's going to be the tell sign there. And I think agents will be facilitating that. So, you know, all the successful agentic stories I've been covering and reporting and doing interviews around have been people who are leaning in, solving that problem, which is, I got to get the use case right. And I know it ties to revenue, low-hanging fruit. They do it. That is the key. And you just can't be wrong. You can't be wrong when you do a checkout, fraud detection. And look at all the use cases of the enterprise. It's very brittle infrastructure to begin with, but their apps are very scoped on domain-specific outcomes. And that, accuracy is a showstopper. So we'll see what happens. I mean, I think it's great today. I mean, OpenAI is phenomenal.
So I was on a Cisco call yesterday, and you know, they've got strong relationships with the frontier model vendors. They also have, to your point about Nova, it's even more acute than the point about Nova, is they have their own models around, you know, networking infrastructure and, you know, root cause analysis, and you know, Dell has it for laptops. I mean, everybody has it. They've got that's their proprietary. We have our proprietary data set, and so it's the combination of that frontier model and that proprietary model that are the superpower. And I think that those that can get that right are going to do very well, and they're going to be able to create differentiation from those LLMs, because the LLMs are going to suck up a lot of that knowledge, but they're never going to be, I say never say never, but I don't think they're going to be as good with that domain specific model. Satya, did you hear Satya on the call Wednesday night? He said, think of agentic as macro delegation and micro steering. I thought that was interesting. You know, you got to have the agentic orchestration layer, where your point about governance and you got to trust it and, you know, all that stuff. And then it's worker bees doing real tasks. And, you know, the one risk I see to my AI ROI, and I think even if it happens, and I think it's going to happen, it's going to be okay, is you're going to see a new type of agentic security hack this year. We already saw it with Anthropic. It was kind of a single agent, but I think you're going to see a multi-agent propagation across SaaS platforms. You're going to see agents infecting other agents, and it's a freaking nightmare. And so, but nonetheless, I think you're going to see it in the headlines, but I don't think it's going to stop the momentum. And I think you are going to see AI ROI, you know, showing up visibly in the numbers. I think you're already seeing it. I think Amazon layoffs, I think IBM's quarter is an indicator of that. I think Meta, their quarter is already an indicator, and it's only January.
Yeah, I mean, let's get into some of those enterprise things. You mentioned in your predictions, 2026 is shaping up as the year the enterprises demand real AI payoff. But the investors are not seeing it this past couple weeks. Look at the stock sell-off. ServiceNow, SAP, Microsoft, despite earnings are down, there's a fear that AI could be an alternative to the expensive SaaS, which is their model, seats, and by you know, the way they're instrumenting their revenue model. Will the incumbents survive, Dave? The software's sticky. Look at ServiceNow. I mean, they're the most stickiest software ever, but now you got ServiceNow competing with, you got Salesforce, okay? You got all kinds of other competitors coming in from call centers, so you got a lot of other things going on.
I think you're going to see
pricing power is weakening here. Are they at risk?
SaaS is in transition because the cloud model is moving to this AI factory model. The cloud, so it used to be you'd ship a piece of software on a floppy disk or a CD-ROM, and your marginal economics were, you know, the cost would go down to the cost of that CD-ROM. It was zero, basically. Cloud changed that, where you had to incorporate the cloud COGS. So that's why, for instance, SaaS, you know, cloud SaaS gross margins are, you know, 80%, not 95% or 75%, because they've got to pay cloud COGS. What's happening now is the cost model's changing, because not only do you got to pay the cloud provider and the COGS there, you have now AI infrastructure costs, and you're paying for token costs. So that's changing. So that is attacking the seat model and the pig fest that SaaS companies have been on. I think what I think is going to happen, you know, it's like the Frank Slootman line. They love to eat at the trough.
Yeah, hold on. Stay on that point, because I think this is a key thing.
Yeah, no, I'm staying on that point. Yeah, go ahead. So let me finish the thought and come in. So I think what's going to happen is initially, so they're going to navigate the Salesforces and ServiceNows and SAPs and Oracle. They'll navigate through that choppiness. They'll figure that out. They'll lose seats, but they'll make it up in pricing. They're always very clever in that. And they'll maintain revenue and grow revenue. And they'll bridge to AI. They'll infuse AI. They'll make it, there's gravity there. They'll make it really easy for their customers to adopt that AI. And then I think, as we were talking about earlier, folks are going to come out of the woodworks that we never heard before and disrupt that. And they're going to have a better model, and it's going to look like a toy at first. Yeah. And then it's, you know, the old 37 signals, which is still a niche, but, you know, that whole concept of bloated software, I'm convinced you're going to see that, and some next great software company is going to emerge. And I really do believe that OpenAI is going to be one of them. And the last thing I'll say about Microsoft, the key issue there in Microsoft, and maybe we can talk about this in more detail, is you saw a loss of a correlation between CapEx and Azure growth. Remember last quarter, CapEx grew ahead of expectations, but Azure grew ahead of expectations. So everybody said, oh, they're growing in lockstep. Well, we saw a dissonance this time around. CapEx was higher than people thought. Azure growth was lower, so people freaked out.
Yeah. Let's put a pin in that. On the SaaS piece, the stickiness you brought up was interesting, that the pricing power, and also that the AI can also replicate software. So like the easy thing in people's minds, oh, I can use AI tools to replicate a company's product and I can sell it. Obviously distribution would be an issue. But I think the key is that if you have the data, you win. So one of the stickiness of, say, ServiceNow is that they had the data, they had the use case, they had a great pricing model, they pretty much had a good lock-in because it was harder to switch. So I was talking to the CEO of Zendesk. Okay, they have tons of data on call center data, customer support data. So you have these adjacency use cases that have almost the same data, but the data is providing a use case that provides similar capabilities as, say, ServiceNow. It's easy for them to come in and compete with ServiceNow because they understand the end-to-end, they have the data, and now could easily go after what was once a lock-solid incumbent in ServiceNow. So they're a great example. And same with Salesforce. They have data, they have service data. Is it at the scale of ServiceNow? No, but they have the workflow. So I think AI with the right data and the domain workflows from an adjacency application can move in. So I think that's something that I'm watching very carefully because, if you asked me if Zendesk would be a competitor of ServiceNow 10 years ago, I'd say, no way, it's a different vertical. But they're kind of doing the same thing. So it's very easy for Zendesk incrementally, without wholesale changes, to go frontal to ServiceNow. So, okay, I buy that. I mean, it makes sense on paper. The question is, what's your opinion on this? Because this changes the horizontal positioning. It's essentially, you can move horizontal into other people's turf. If you're kind of doing the same things at scale with the data, you have the domain knowledge of workflows. So, okay, let's just go target that. So I think, Zendesk and Salesforce are direct threats at ServiceNow, for instance. What's your reaction?
So I think the advantage that the incumbent SaaS vendors have, like the ones you mentioned, that's why I like Salesforce and I like ServiceNow, is they have the process data, the business logic, the process data, the metadata associated with that is part of their system. And so they can leverage that. The question is, are those processes the right processes? Or are they just paving the cow path, as I'd like to say? And if it's the latter, you got to be concerned because people are going to find ways to create new processes. Yeah. And I don't know if that's the new type of process mining, if that's just AI, magic, but there may be better ways to do things. And it's corporate inertia. Well, that's not how we do it around here. And you think about SaaS generally is locked into a process, or the process is locked into a SaaS workflow. And there may be better ways, to the earlier, thing that Paul Nishwati sent me, there may be ways to do the same for 1/10 the cost, or do 10 times more for the same cost. And I think, to your point, the Zendesk example, that's interesting because you get these adjacencies that you never really thought were competitive and now could be. So it's Zendesk or some kind of Zendesk-like startup that's doing it completely differently. And it starts out with, they don't have two-phase commit. Okay, well, fine.
No, well, this is why I like this conversation, because if you go to Zendesk, if you're like, just put your computer science workflow hat on, do a little workflow, they have mechanisms that do things. So customer service for a call center, just make something up there. Okay, I'm servicing a call center by the phone. There's service. They issue a ticket. It's a workflow.
It's service management.
If you just create a box and call it a function, a mechanism, you can just swap the name. This ticket goes over here. So the systems that people are building in these use cases, is what I was getting at, look the same at scale. It's just different names. So it's very easy to switch over and using agents think, well, why don't we just target the same customers that ServiceNow targets? Well, it's the same scale. It's just a little, maybe put an extra, flow in there, but it's not a whole SaaS full stack build out, get the database, get the workflows, instrument everything. There's not a lot of, there's a lot of leverage in the knowledge of doing, say, that customer support in the use case to go after and broaden the scope of the opportunity. So the scope changes in the industry for, say, those guys. And same with Salesforce. It's a no-brainer for Salesforce to say, hey, let's use Agentforce to go in and go out over here.
Well, the SaaS attack is on. I mean, you're seeing it, certainly seeing it in the stock market, but you definitely see it in seat growth. One of the things that we saw in our ETR predictions with Eric Bradley is the seat growth is, minimal or negative, but the revenue growth is not.
Yeah.
And so, but that's a different model. And so you saw this with on-prem. I mean, you go back to what is it, PeopleSoft and, you know, the North Dakota software company and all the legacy, Manugistics and all those guys, they kind of got gobbled up, and that's what will happen. They won't die, they'll just get acquired for their customer base, and some will make it through. I do think Salesforce, ServiceNow, Oracle, SAP, I think they'll make it through.
All right,
Workday,
so the enterprise
interesting.
software and the AI native applications looking good. Now let's get into the blockchain.
Well, I don't know if they're looking good. They're in transition, and you know.
Well, the
I
AI
remember-
native application is looking really good. Look at it.
Oh yeah, no. So yeah, I know. I'm sorry. I thought you were talking about the SaaS company.
No, I'm talking about the top of the stack. I mean, it's a different. There's the transition and there's an emerging, right? So that's the app side.
But you know, Wall Street, they don't like to bet on companies. Never invest in a company in transition. There's an old Wall Street bromide. But sorry, I misunderstood.
Well, John Chambers says win in transition. Well, I mean, I'm making a point because that's a whole discussion. But I want to get into the bottom of the stack. The picks and shovels are crushing it. Memory, storage, chip, gear. All the players like Samsung, SK
DRAM, NAND,
ASML, Seagate,
SSD,
full-blown infrastructure wave capture.
HBM.
I mean,
yeah,
this is like a huge look at Micron, right? Micron's crushing it. So
Micron, SK Hynix. I mean, Samsung. I mean, those guys are killing it. It reminds me of the old disk drive days with back to Al Shugart, where there was oversupply and undersupply. Well, right now there's undersupply, and if you could time those cycles, which we could do. And I never invested back then. We weren't allowed to, but we had a lot of investor clients, and we would tell them, "Now's the time to buy. You know, this is going to start rocking. Now's the time to sell. There's overcapacity." And so right now there's undercapacity in those, and they're just skyrocketing.
This is the key, because this is the shift that's happening. The AI infrastructure is still tooling away. That's why the memory prices and supplies are constrained, and the transition on the SaaS enterprise software and AI native is on top of that. So that's kind of waiting in the wings, still growing and changing. So the game, I don't think will get started yet. I think it's certainly in transition, but as the AI infrastructure gets up, it's going to be massive. So I think that to me is the takeaway, and the earnings show it. Look at Alphabet, look at AMD, Qualcomm, ARM, Supermicro.
Let me ask you a question. So I won't say who I talked to because it was kind of a private hallway conversation, but I talked to an executive at an infrastructure company, PC company, and we were talking about, is this necessarily a bad thing that there's a shortage and memory prices are going up? Because if I recall during COVID, that was a boon for the like of, you know, Dell and HP and Apple. But then on Apple's earnings, they kind of cautioned that the memory costs are going up and that might hurt earnings. And I'm like, is that because they're going to hold prices, or wouldn't prices go up? Certainly, if laptop prices go up or the configurations get smaller, the margin should improve. What are your thoughts on that? Is this actually good news for the manufacturers and bad news for the consumers and the customers, or not?
I mean,
the other way around.
I mean, well, I think it's going to come back down to adoption, right? So the pricing is a short-term thing. I think they're pricing it in. Again, Broadcom and Nvidia probably on the right side of the supply chain. But if you look at the IoT market, all the wearables, OpenAI just bought John Ivy's company, you're going to see a lot more solutions. So I think that'll be priced in. The open question for me is, to the consumer adoption, is the wireless carriers, the Spectrum license holders for our phones, and then the Ethernet wireless side of it too. You got wireless Ethernet, as known as Wi-Fi, Wi-Fi 7. Broadcom came on theCUBE many times talking about that. That's a gigabit plus, so you're going to have more throughput on Ethernet. But if you're a AT&T or a Verizon or a T-Mobile customer, you're also having access. So, you know, I think what happens with wireless carriers, which is our normal phones, and then also Ethernet, at the edge will determine the use cases, and it will come down to who will pay for things. So I think the end user is still an open question outside of the normal AI applications for my bank or my app. So I think you're going to start to see a democratization of that layer of access where, hey, I want to access the network. And oh, by the way, once I'm in, agents or an AI factory will decide how to connect, provision, give policy, data rights to whatever application I got. So I think it's going to be a lot more seamless access from users, people walking around the real world, or going to retail, or a worker in manufacturing, or a car. The physical piece is going to be limited by the network, right? That to me, That's going to be the big bottleneck. Not so much prices, I think that's going to level out. I think it's just what's in demand, what's going to be the preferred architecture. But to me, the pricing will be determined by the solutions that get deployed. So I'm kind of not too worried about that. I think it's more of, that's the way the business is right now. Cost of doing business, it'll get factored into the price. Yeah, people will pay more, but that's going to impact the supply chain and the manufacturers, not so much the end user. But I don't think the end user will see anything yet that's going to be, you know, an inflationary cost for them with their technology. I think it's going to probably, if anything, lower. I mean, in my opinion, but we'll see.
Well, we know that NAND prices and DRAM and HBM have gone through the roof. We're seeing prices in the last several weeks go north. You're seeing every earnings call is talking about it where it's relevant. And you're seeing Vast. You saw Vast now has this big program around NAND flash efficiency. So it's real, and I think one of the predictions is it's going to last. It's going to go through 2026 and into 2027. So
I want
I
to
guess
I
actually could be good news for a bunch of suppliers.
I want to get your thoughts on two things, IBM, but I want to get a quote I saw from the All-In guys on Elon's megacorps in the modern day Berkshire. It was reported that Musk is floating a mega merger between xAI, SpaceX, and maybe Tesla, possibly rolling into one public everything AI vehicle. Chamath on All In called it the Berkshire Hathaway of the modern century. Dave, what's your thoughts on this?
Well, so first of all, remember Chamath a couple of weeks ago said that his prediction in his predictions episode was that Elon's not going to take SpaceX public. So now he's flip-flopped on that one. I mean, look, I think because Elon is going to try to put his companies together. Why wouldn't you? Yeah. And try to get synergies. I don't see it as the Berkshire Hathaway. I don't buy that at all. I think that's kind of stupid, to be honest with you. And here's why. Elon is gaining synergies with all these companies through AI. I think that's how he looks at it. He's got silicon chops, design chops with Tesla. I think he's going to bring that into X with Grok and Grok at the edge. Clearly SpaceX is going to be able to use AI. I don't know if the Boring Company's in there. So AI is a horizontal, a substrate across all of those assets. I mean, Berkshire Hathaway buys great companies and runs them, and then has them send all the cash left over up to the corporate headquarters so they can invest it. I don't buy the analogy. I just don't see Elon as as that kind of operator. I think Elon's a technology in modern day, but I mean, I don't know, I just don't see. I didn't hear it, so I just heard it from you. It doesn't make sense to me.
Well, it's mostly more of a wealth creation financial equation, less of a Berkshire Hathaway making money piece. I would agree with you, but it is interesting the way he's thinking about AI, and I do like the idea that, hey, if I have these assets, why not have AI cross-pollinate? I mean,
for sure,
it's just
that makes sense.
I mean, he could raising the kind of capital.
But there's no but there's no cross-pollination in Berkshire between Sea Candies and Coca-Cola, and I guess there is a little bit with McDonald's. I mean, there's some synergies there, but it's not like they're orchestrating it per se. Elon is going to orchestrate it. He's going to say, you're going to use my chips. We're going to use X's data. We're going to use Grok at the edge. It's going to cut through. You can talk to Grok in Tesla, right? Yeah, you could buy Coca-Cola at McDonald's, but it's not like Warren Buffett orchestrated that. Maybe it is. Maybe I'm wrong.
So let's talk about IBM. They just had their results. They reported their fourth quarter revenue, 19.7 billion around there, up roughly 12% year over year, beating analysts' expectations. Net income surged like 90% to 5.6 billion. Just amazing strength. Software revenue jumped 14%, infrastructure revenue 21%. Mainframe demand was good in related systems. AI growth on the software, as I mentioned, but the generative AI book of business exceeds 12 billion, highlighting the adoption of Watson X and other AI platforms. What's your take on this? As you know, we are close to IBM. We're briefed by them all the time. Arvind Krishna, the CEO, has been a CUBE alumni many times. So what's your take, Dave? You know, we're close to IBM. We're seeing it too. Were you surprised by this?
Not at all. Not? IBM's got a lumpy business. It always has had a lumpy business, and that's because it's got professional services. Consulting is a big part of its business, and that by its very nature is a lumpy business. And as Z goes, IBM goes. I've always said that. And they're in a Z cycle. Z grew 62% this past quarter. That's going to drag along everything, services, software. Software was the sticking point the last couple of quarters. Remember, I always thought it did well. I was like, software's growing pretty nicely, and everybody's complaining because it missed by a point. It's what, Wall Street, and they go by the print. I get it. Software grew, what, 14% this past quarter, I think? And so, and the other thing is IBM threw off, I think, what, 12 billion, was it, in free cash flow? 12 billion. So it's always been a free cash flow machine. And I think IBM is one of these companies that has AI chops internally.
Yeah.
I think companies like IBM, JP Morgan Chase, Dell, Eli Lilly, Walmart, they're applying AI, Capital One internally, and they're getting returns. There's no, there is no AI ROI. There is, and these companies are seeing it. Amazon, Google, Microsoft, Meta, these big companies are seeing it, and their learnings are going to trickle down to other companies. So I wasn't surprised, and I'm excited for IBM. I think Arvind Krishna is doing a great job. I mean,
I'm not surprised at all. I mean, I'm psyched for IBM. I'm kind of surprised by the increase across the board. That did mainly because I wasn't really following some of those other areas, but I do like the AI, generative AI piece growing so fast. So I'm really not surprised as we've been covering it. Like Jim Cramer took a lot of flack for Nvidia, but he was right. We were watching IBM. I think you and I had a chat on a pod when we talked about the Red Hat acquisition. They got HashiCorp. They got Red Hat, although Red Hat's a separate company. I think maybe they should have kept HashiCorp separate. I'm watching that very carefully under Rob Thomas. Not sure how well it's doing. Got to keep an eye on that. But overall, the Red Hat was the beginning. Okay, we saw the move to distributed computing and hybrid. Arvind saw that quickly. But I think IBM will go down as probably one of the best transformation stories. You mentioned the market's in transition and you win in transitions. I think IBM, you look at it, they've transitioned beautifully. I took a lot of flack for the whole, I'm bullish on mainframes. Look at Z. Z's not just a mainframe, it's a big node in the distributed computing network. So that's contributing. That lifts the AI side everywhere else because it does its job in the network. But they have transitioned, Dave. And I'm going to sit down with Jim Kavanaugh next month, the CFO. I'm going to ask him about the transformation because it's been a CEO and CFO-led transformation, making good bets, the right acquisitions, good partnerships, but they really cranked on the focus on the numbers to make the numbers work with the transition. So it wasn't just financial engineering, it was intentional financial strategy mapping to the business strategy that Arvind had. So I think the Jim Kavanaugh Arvind combination there is going to be a very key piece to look at. I think that's going to be a success story. I think it's going to be a template in the enterprise as it's kind of under pressure to deliver this year. I think IBM might be looked at as a case study.
I just Googled this. Well over a year ago, I just was, I don't know, banged out some random thoughts on IBM. And I put this thing out there saying, I've been following IBM since the early 80s when the industry was all IBM. Remember, IBM had, not in the 80s, but in the 70s, 50% of the industry's revenue and 2/3 of its profits. It'd be like Microsoft having $2 trillion in revenue. Microsoft's probably around 330 in a run rate. But at any rate, so I said, it's been over a decade that I've been this excited about IBM's prospects. And I went through this rap and I said, my biggest criticism of IBM has always been its capital allocation strategy. It had good M&A and then it lost its M&A chops. Red Hat, seemed to be a turning point and changed that. I said, my advice to Arvind, Rob Thomas, and Dario Gill, when Dario was still there, keep going for it. Now's your time. You have the data, you have the talent, you have the resources to pull off a Nadella-like transformation. And so I never got as many likes and impressions and comments on any post ever. It was like,
send me that link. I want to look at that and re-amplify it. Say, hey, remember this.
I couldn't believe it. I was like, and then, I have to figure out the exact date, but it was the timing was great. But anyway, those things happen.
I mean, go back 10 years ago when Rob Thomas was on theCUBE and he said you can't have AI without IA, which is information.
It's a great line. It's still legit today. I mean, it's right
I
on.
told him at last of conference, I'm like, Rob, you got to bring that back. And he's like, kind of rolled his eyes like, dude, that's relevant. And now,
It is totally relevant. He's so ahead of his time on that one.
yeah, he nailed that
He doesn't
one. And
use
we were
that
like,
anymore.
rah, you got it right. Don't screw it up.
Yeah,
That's like Nvidia saying, I don't want to talk about AI factories anymore. Go back a year. That's like, so, Rob, if you're listening, get with the program, get back on that slogan. All good. Dave, a lot going on, a lot happening. Let's just go through here.
By the way, before you get off that, lawyers just done some modeling on this, and it's like, he's right. Rob Thomas is so right. Don't worry about getting all your data in line. Get your AI infrastructure, your IA in line, and then just go. Get on the AI curve. But it's the infrastructure is key. If you don't have a foundational infrastructure of database and the surrounding tooling, then that's a problem. But get that in place and then just go for it in AI, as Floyer's modeling shows. Don't frig around with the data. Don't wait. Go.
Well, AI.
You got to get the IA, the IA first.
If you don't have the data, that's why I think the builders are kind of like almost not ready, as you pointed out, in transition. And the enterprise, certainly AI side's working. The markets are blinking. This is no longer a technology cycle. It's a capital cycle, platform shift, and the societal stress that's happening all at once, whole AI safety. So money's full speed ahead. The builders in the enterprise are saying we're not ready. The markets are blinking. Interesting fodder for the CUBE pod this week. Dave, as always, great takes, good analysis.
Thank you, John. You look a little tan there. You been getting some sun?
No, I'm still tan from Florida, from the holidays. I'm not as good skinned as you are. You hold the tan for like a decade. So like,
I'm feeling kind of pasty in the middle of the winter, but I guess we'll talk Super Bowl next week. How you feeling about Patriots Seattle?
I think I just keep replaying the 10-year-old clip of Butler intercepting the ball on the 1-yard line and being like, yes, we need some breaks. I think Seattle's looking good. I think it's going to be the tale of two young coaches with new franchises. So, even though Seattle I think it's stacked, if you apples to apples, they're probably stacked on the size, speed, on the defense, offense. I think X factor goes to Drake on the Patriots for sure. But it's going to be who blinks in this one, because I think it might be nerves. I think the Pats would have the edge on momentum, confidence. I think Seattle, if they get Super Bowl fright, which happens in the Super Bowl, they get there and like, okay, all new people. We'll see. I mean, not a lot of savvy Super Bowl players there. So it's a toss-up. And I would say that Seattle would have the edge, and I'd say at the beginning, but I think the Pats are going to win.
Well, and then how about Belichick not getting to the Hall of Fame? And he pulled that power move. Did you see that?
No. Which one?
Oh, you didn't see that? So Belichick doesn't get into the Hall on a first ballot. You saw that, right?
I did see that. I saw all the commentary.
Everybody gets all pissed off. So Belichick, this is a ballsy move. First of all, I said, yeah, frig him for not playing Malcolm Butler against the Eagles. But so that was kind of my tongue in cheek. He didn't get in, I guess it's Spygate or whatever. Who cares? But then so Belichick sends a letter to the Hall of Fame saying, take me out of consideration in any future Hall of Fames. I will not accept it, number one. Number two, I want all my memorabilia back. Because he's like the greatest historian in the history of NFL history. So he demanded all his memorabilia back. And then the third, he's having a charity event the same day as the Hall of Fame induction. And he's invited Robert Kraft and Tom Brady and a bunch of other luminaries who have spoken out in favor of him and support of him. So that is like a baller move where he's just kind of trying to render the Hall obsolete.
My take on this is that, he's had a lot of negative personal things and a lot of social media, cultural takedowns. And I think he's a little bit tone deaf on that. I'm critical of Belichick on that. But it shouldn't be a factor. It should be straight up.
Definitely
should
not.
Be straight up on his legacy. It's not like he's Pete Rose, right? It's like,
how could you not?
It's like,
right.
He didn't cheat. Well, he did cheat. He
did cheat, actually.
He did cheat. But
they told him to stop cheating, and he kept cheating. So I guess that was maybe why. And he kept cheating against Mangini, who was assistant coach, who was a rat. He ratted him out.
Yeah, right.
So there you go. Mangini the rat.
We'll still debate the cheating. I call it good gamemanship. But the NFL has gotten very politically correct. It has, but I mean, there's even other controversy with the NFL. I mean, NFL has become way too bogarty on things. Like, look at what they did with on the holidays, Thanksgiving and Christmas. Basketball, I always watch basketball on Christmas. They had all
Yeah.
NFL. They're talking about a Wednesday game now. So like, there's all kinds of like, I mean,
Tuesday night football.
it's like, like, come on, guys. Like they're over rotating. They've jumped the shark in my mind. So like, I think NFL's got to tone it down, get back to basics. The fans still love it, but the
You know what I do love though? I do love when the games are on Prime. I think in the Amazon stats, how they put the red circle around the mic and the data and the analytics. It's pretty awesome, AWS. So props to you all.
Did you notice in the Denver
game? Makes a great viewing experience.
Did you notice in the Denver game they had lit up the markers and then on the snow, and
yes,
it kind of went away and you couldn't tell where the ball was. So there's tons of technology. I mean, I think the NFL is a great technology story. We interviewed them at AWS a couple of years ago when they did all the instrumentation for the safety. So I think they just got to clean up, not being too brash in terms of like flexing too hard. So. But I'm against the Belichick thing. I think he should have got in.
Of course he should have got in. That whole thing's so stupid.
Yeah, I mean, it's not like he was like on the bubble either. So it's like Michael Jordan in basketball. It's like, yeah, he's got everything. It's like Larry Bird.
Tom Landry and Chuck Noll got in first ballot. I mean, come on.
Yeah.
Although Vince Lombardi didn't. So there you go. They named a trophy after.
Well, we'll do the pod next Friday on the eve of the Super Bowl weekend. It's going to be here in Levi Stadium in San Francisco area. So it's going to be in Santa Clara, which is the Bay Area. So
tickets start at $8,000.
Yeah, anyone out there want a CUBE sponsorship? I'm happy to go to do a little CUBE pod. A celebrity appearance. Let us know that ticket. Right. Dave and I are happy to attend if you're listening.
Absolutely. Yeah. We'll get John and Dave in exchange for the 2 seats in the 50.
Yeah, we'll waive our celebrity appearance. Yeah. All right, Dave, we'll see you next time.
Thanks, John. We'll see you later.